Hello, this is Jonathan with iVol Live. Today I will demonstrate how to pull up a stock within iVol Live and then analyze hypothetical values based on different inputs using our recently updated calculator tool. So you click on the icon for calculators. That will load two calculators. One is the options calculator. The second is the probability calculator. So here we would need to enter a symbol. Let's say Gilead. That'll pull up whether or not it's an American or European style option. Gilead's American. That'll pull up the last price. That'll pull up the nearest at the money strike price, the nearest expiration date. That'll tell us how many the time to expiration, which in this case would be later today as I film this on a Friday. The implied volatility for the option, interest rates, the dividends for the company, and then the frequency. So what's neat about this is over here on the right, we have the call value and the put value. You can see here, this is all based on those parameters here to the left. We also have our bid ask and then all of our Greeks. So now if we wanted to look, say, further out into the future, let's say we wanted to go, 6 months out or so. We could come here to, let's say, the February 16th, 2024, and we could go, further out of the money, right? We could say, okay, let's look at the 72.50 here. So we're lower, right, than the current share price of Gilead, 76.43. So from a call, that'd be in the money. And you can see here is the pricing. We could also play hypothetical. We could say, well, what happens to this stock if the implied volatility goes higher, right? So we're at 24.92. What if it goes 10 absolute points higher to say 35? And we could see that call went from $8 and change to over $10, and the put price changed as well, as did all of the Greeks. So this is a really neat way to play. You can also say, all right, well, what if it went from 24 down to 14, right, with implied volatility? And we could see that that pricing has adjusted accordingly, right? This is lower than what it was at 24. So again, a really cool tool. We could also come out here and type in, let's say, Gilead. This is our probability calculator. So the last price, 76.45. Again, this is our expiration, the next occurring expiration, but if we wanted to, we could go out to February 16th. Here's our new strike and expiration. And then we could say, all right, well, what's the likelihood that Gilead will expire below 76, right, at expiration? And then what's the likelihood it'll expire, let's say, above 80? This is helpful to determine should we be theoretically buying calls, buying puts, doing a spread trade. And we could see there's a 48% chance Gilead will be below 76 at expiration next February. There's a 39% chance Gilead will be above 80 at expiration. So again, a really, really cool tool to play with hypotheticals here. You'll get your, how many days to expiration, as well as the current volatility reading, which you can always play with as well here. You can adjust accordingly, right, to 33. And that shows you, hey, if implied volatility does go higher, here's the likelihood of the price action within Gilead. The other place to find our calculator is within the P&L calculator. So if we come here, we'd be able to pull up Gilead, and we could scroll to any of our strikes. Here's that February we've been looking at. You can look at the 72.50. And then from here, what happens is this populates behind you on our screen here. Here's our user guide for the P&L calc if you need it. But basically, the blue line is the break even. Anywhere shaded green is where we're profitable. Anywhere shaded red is where we're not profitable. That's expressed over here in table format. And then this is telling us the action. So in this case, we're selling this put on Gilead. So of course, we make money if Gilead stays the same or goes higher. Lose money as it goes down. However, if we buy the put, the opposite is true. We're making money as Gilead goes down in price. So again, this is another really cool tool because you can also come in here. You have the implied volatility and all the Greeks for the trade, but you could come in here and adjust volatility. 20 absolute percentage points, and all of our pricing will automatically change. You can also come in here and update days to expiration. So we have higher volatility, fewer days left in the trade, and this will update in real time. So it's a really, really cool tool, again, to pair with the options calculator and with the probability calculator. So this has been Jonathan with iVol Live, demonstrating how to use calculators for hypothetical future pricing. Until next time, happy trading.